Thanks for joining me for today's episode. So today is part one of a 4-part series where we go over the taxable crypto activities. All right, what are you doing with your crypto that is taxable, right? So today, part one is cryptocurrency used to pay for goods or services. So when you pay for a good or service using your crypto, it is considered a capital transaction. And I'll try to explain that in a little bit in a moment. So it's just important to know that when you give your crypto in exchange for receiving a good or a service, there is a taxable transaction and we've got to report that on your tax return. All right, so this is similar, the record keeping of it, you guys, is similar to if you were selling your investment of a stock through your broker or your investor, okay? So let me give that example. So I buy one share of Facebook for $1. Just go with me, okay? 2 years ago, okay? Today I sell it for $2. So I have a gain of $1 that I have to record on my tax return, or my tax preparer has to, okay? We all understand that, right? And then there's capital gains, short-term, long-term, okay? So when you pay for something using your virtual currency, you are giving up or selling your investment in a portion of your crypto, so you're triggering a taxable transaction. All right, so let me give an example of what that looks like. So in a future world that we will one day live in, you are going to be able to go to the grocery store and buy groceries with crypto. All right, so let's say that you're holding however many units of, let's say, Bitcoin, okay? And you go to the grocery store and you spend the equivalent of 0.01 Bitcoin. Yeah, it's about $100, a little less, on groceries, okay? So 0.01 Bitcoin is your total. So you swipe your magic crypto card that we now have in the future, and you pay that crypto, meaning you give up your Bitcoin, and then you get to take your groceries home, right? Okay, well, when you give up that crypto had a value to you, okay? And when we go to do your tax return, we'll figure out what that value was. But whatever it was, you either had a capital gain or a capital loss when you used it to buy your groceries. All right? I hope that makes sense. So when you sell it, so in the year you use it, so the year you use it to pay for your goods or services, you have sold a portion of your crypto. And therefore we have to record it on your 1040. And I'll just try to go over quickly what that looks like, because this is where you want a tax preparer, okay? I don't know anybody out there who does their own tax returns with brokerage statements, okay? And all the people, I mean, that's a big reason why people come to us, is because they get these brokerage statements with all these 1099Bs and sales and they don't want to deal with them. And that's what we do. And crypto is 100 times more complicated because there is no form. Okay, and we will talk about all these pieces in different episodes. So if you're, go to the main menu, and by now we may have episodes on this. But let's talk, today we're just focusing on paying for that good or service. Okay, so you know that you used your crypto in 2019 to buy whatever it is you bought. Okay, that is your flag that, hey, I need some help with my crypto when it comes to tax prep. Okay, so then you hire us, or maybe you do it yourself, but let's say you hire somebody, and that what they're going to do is they're going to fill out what's called your Form 8949 and your Schedule D, which records your capital gains and losses. And in order to do that, there are pieces of information that they need to know about both the transaction where you sold your crypto and the transaction back whenever you bought it. Whether that was earlier this year or 5 years ago. So the information about the sale that must be tracked in order to properly report the transaction on your tax returns are as follows. So you need the original purchase of the crypto you used. You need the cost basis. So that's how much you paid for the crypto whenever you originally purchased it. You need the sale date of when the crypto was given up, so the sale date of your transaction, so when you bought when you bought your goods or services. And then you need the sales price, which is the transaction of the product that you just paid crypto for. All right, so 4 things you need in order to record this transaction properly on your tax return. Gathering all these things, they are tracked wherever you trade, but it's a matter of gathering all the information and all the historical information from all your different places into one place. And there is software out there to do that, and we will talk about that in a different episode. For now, we're just sticking with the basics. So today was all about using crypto for goods and services and why and how that's a taxable event. Okay, I hope I made it easy enough for you guys just to track it. Again, it's not your job to understand how to do it. It's just your job to understand what I'm saying so that you know that there is a taxable event there and you need to be reporting something. All right, questions, comments, leave them in the, leave them for me. Let me know if there's things you want to hear, certain questions you want answered, and definitely subscribe so you know when a new episode drops. Okay, guys? Thanks.